Hi everyone. In this video we're going to show you the basics of entering a trade using the opening range breakout strategy. So as you can see, I've got a top 40 CFD 5-minute chart up. I have already drawn my range lines. For this particular instance, I've blocked out the rest of the candles just so I can take you through them one by one to see what happens in this trade. So exactly what has to happen in order for me to enter a trade on the opening range breakout strategy? Simply put, the price has to break out of the range and close out of the range for a trade opportunity to be triggered. When I say close, I mean the new candle needs to have just formed, clearly showing that the closing price of the last candle is outside of the range. It is very important for the candle to close outside of the range. If you don't wait for it to close, you could preempt the trade, which will most likely end in disaster for you. So if the price were to break out of the top of the range, which is the top line over here, we will enter a long position, meaning we will trade the chart upwards. If it breaks out and closes below the bottom of the range over here, we'll enter a short position, which means we'll be trading the instrument downwards. So like I said, we've got our range here, which is the first 6 candles of the day. And now I'm going to move this block that I've created just to show you what happens in every candle after the range has formed. Okay, right off the bat, we have a breakout through the bottom of the range. Now, in order for you to enter the trade, the candle must be completely closed and a new candle must form. And as soon as the new candle forms, which confirms the close outside of the range, we will enter a short position. So in this case, you would have entered your short position at the opening of this next candle, which would be around that level. So that was quite a quick opening range entry. Sometimes it can take an hour or two before it breaks out of the range. Let's have a look at another example quickly. Okay, let's have a look at this example over here. You can see we've plotted our range lines. And let's have a look and see what happens. Okay, so the first candle after the range, as you can see, at some point it opened over here, at some point it went through the bottom of the range, and then it came all the way back up, went even higher, almost to the top of the range, came back down to here and closed over there. So it broke out of the range, but it didn't close outside of the range. And as I stated earlier, it's very important to wait for it to close because you might preempt the trade. If you thought when it was down here that it's a done deal, that it's going to close outside of the range and entered a short, you would be hurting right now when it was all the way up there. So let's continue, see what happens. The next candle stays within the range, so we do nothing. Same with the next candle. Also the following candle. A lot of the time spent with this strategy is waiting patiently for an entry point. Can get frustrating at times, but like I said, it's very important to wait for it to close above or below the range first. Still within the range, continues. Okay, Now in this candle, you can see that it broke out of the range and closed below the range. So we would wait till the next candle opens, which would be over there. So that would mean that we entered short at about that level over there. As you can see, this candle then went up and closed within the range. We would have to wait to see what happens as the trade progresses. So there you have it, the very basics of entering a trade on the opening range breakout strategy. In the next couple of videos, we'll be going into more detail about exiting trades, targets, stop losses, and those kinds of things. Thank you for watching.